चलिए, so let's start, है ना? So we talk about beta today. What is beta? So one is it is correlation, and correlation is always with uh, the relation is with someone. In this case, it is a broad-based index. Okay, so we usually take what? Broad-based index, and for broad-based indices, you would either take DJI, which is Dow Jones, or Nifty, है ना? 50 or Sensex, correct? बराबर है? Do we understand? Yes or no? Why are we comparing it to the broad-based index? Why is it not Bank Nifty? Why is it not Financial Nifty? Why is it not something else? Why are we comparing it to broad-based index? The asset class, the asset price. हाँ नहीं बोलता हूँ. Say you are comparing, for example, you are comparing Maruti, okay, versus you are comparing Maruti to, say, you are comparing it to, for example, no, we are comparing it to Nifty 50, for example. I'll show you in the terms of this thing. So why are we comparing? So unsystematic. So what is systematic and what is unsystematic? Why are we comparing? In a simple language, say someone does not understand the meaning of unsystemic risk or systemic risk.
We can say that how market will change with respect to Nifty, because Nifty has many companies. So how it will have an impact on market.
But why Nifty 50 only? Why not Nifty Auto?
Because that has an impact on different sectors.
Okay.
Auto will be having only automobile. Nifty 50 has not only automobile, it has different sectors. Director immediately has an impact on market.
Okay. Why Nifty 50 only? Acha. And that is the reason. So we are comparing it to a broad-based index because a broad-based index, whether it is Dow Jones, whether it is Nifty, takes care of the whole of the economy. So it's also a barometer of the economy. So when you say that you're looking at the macroeconomic factor, the overall risk, Nifty Auto or any other index for that matter cannot represent that. And as you rightly said, but it has to be slightly, the answer is to be slightly tweaked, that yes, we are looking at the overall index because this represents the overall systemic risk in the economy. Nifty, Bank Nifty, or does not. So it includes all 50 companies for different sectors. Agreed. But this represents the overall risk. So that's what it is represented. Now, how do you calculate that? So essentially, what you do is not sure why the color is not changing, but anyway. So essentially, what you do is okay. You look at, so this is x-axis, okay, and this is y-axis, okay. Sorry, just the reverse part. So this is x-axis, and you are looking at y-axis here. On x-axis, what do you have usually? You have independent factors, correct? And on y-axis, what do you measure? You measure dependent factors. So you are essentially measuring that width in relation to Nifty. If Nifty, for example, moves like this, how does your particular asset class, it could be Maruti, it could be Tata, it could be any company that you take, or it could be anything, it could be gold, whatever you want to compare, how does it move? Does it move more? And does it move less? So is it more reactive or is it less reactive? So you are measuring what? You're measuring the sensitivity of that asset class. It's also a sensitivity analysis in that sense compared to Nifty. It is always compared to Nifty 50. So we will cover those exceptions. First, let's understand the general rules, then we'll take all your questions. So it always measures the sensitivity, like a scenario analysis, that if Nifty moves 1%, what will happen to this particular asset class? A defined asset class, which is that stock or that sector or whatever you call it. It could be sectoral beta also. So you can have a company beta also, individual beta, or you can have a sectoral beta also, right? What is the beta of that? And it's a simple correlation formula that you look at. So it is statistics in play. You're looking at the relation between two prices. The two prices, so one could be more sensitive with regards to the other could be less sensitive. So essentially it is nothing else but the slope, right? So if it moves, Nifty moves, for example, like this, and if your asset class moves more, you are looking at this angular movement. How much more, how much less? Does it move more? Does it move less? So you are looking at the angular movement. Now, remember that mathematical formula when you're trying to find वो क्या था y is equal to mx plus c. हाँ, mx, this is the x and this is c. ठीक है? This m multiplied by x. So when you're looking at, this is the slope of the curve. So beta is nothing but the slope, and slope tells you what? Nothing but the sensitivity. Correct? It is all about sensitivity. That if my asset class, it is always in relation to something. You can have your own beta also, not necessarily need to establish in relation with Nifty. But when you are looking, when you have said that Nifty define, it is used or is defined or is leveraged or is used as a factor of economic barometer, then you will use Nifty. There is no other index that you can use. Point number one, right? So when you are looking at Nifty, then how sensitive in that relation, how sensitive is that? In that sense, because when you look at moving averages, when you're looking at moving averages, your moving averages, okay, also define the movement. They are also define sensitivity. Okay, why it defines sensitivity? Why moving averages define sensitivity? Because moving averages tell you that in a mean reverting class, if it is mean reverting, that means if the average is say 5% of any stock, 5%, if it gives you 10%, there are chances that it will come back to 10% here. If it has given you minus 5% return, this will come back to this one. This is also sensitivity. If it has run up too fast or if it has underperformed, it will come back to its averages, because the long-term average is this much, is 5%, right? This is exactly what beta is doing from a statistical perspective. It is not a moving average. Statistically, is it moving average? No, absolutely not. Can you call this as a moving average? No. But it behaves like a moving average. That means if you have a beta of, say, any stock which is, say, for example, it is 1.2. First of all, it moves 20% more. But 20% more in comparison to what? It is always to the benchmark that you linked. And in this case, for majority of the cases, you look at Nifty. So it moves 20% more. But will it always move 20%? That's just not possible. Sometimes it will give you 35% turn or move 35%. Sometimes it will move. So if Nifty moves 1%, this will move 1.2%. Okay? Or some, but that's the ideal situation as per beta. Correct? But sometimes it can move 1.35% also. Do you agree? Yes or no? And sometimes it can move 0.8% also. It is, in a long run, when you look at a weekly beta or when you look at a monthly beta, that means you are considering weekly prices or monthly prices. That means you are looking at maybe a decade of history. You expect Maruti Suzuki, when Nifty moves 1%, this to move by 1.2%, or when this moves, say 1%, you are expecting it to move by 1.35%. When this, say, Nifty moves 100%, has gone down from, say, 25,000 to 50,000 odd levels, you expect the Maruti stock prices to escalate by 120%, but that's an average price. Please understand. It's not a fixed price. It can move 135% also, and sometimes it can underperform. Otherwise, all times, then life is very easy. You just buy that stock and you know that it will escalate by 120%. That's not going to happen. So beta is nothing but an average. So it is a mean reverting thing. It is a mean reverting thing. That means when Nifty has moved, would there be instances when Nifty has gone up by 10%, but for some reason Maruti Suzuki has not performed? Could there be situations? There will be situations where that has happened, correct? That means you expect, if it has underperformed Nifty by 10%, so if that's this given you a return of 10%, but this has not given you, say this has given you 10% returns, negative 10% returns, you expect, the expectation was that it would move more in tandem and give you more returns because it is a single stock, so more risky, right, as compared to Nifty. But what if it gives you 10%? Can you blame beta for it? It's a statistical calculation, calculate over. In the long run, you expect beta to, because of beta, you should ideally get move more than 20% more than this one. So if this gives you 10% return, then ideally it should have given you how much? 12% return plus. But this has given. So that means it is a mean reverting. It adds to your mean reverting concept. What is the meaning of mean reverting? If something has overperformed, it will come back to its average, its own mu. Mu, you remember? Its own average. Mu is average. If it has underperformed, it will come to its own average. So if the average performance for any particular stock, say for example, whatever period you are considering, so if you're considering 1 week, 2 weeks, 1 month, 1 year, whatever is the time period has to be defined. In that period, whatever is the average return, say I consider that, okay, when the stock starts moving, in 1 week it gives me 5% return. If it underperforms, there are chances that this would come back. You know? In this case, there could be certain instances where the benchmark to which it is linked, there is a divergence in the performance. This has moved northward, the benchmark has moved northward, whereas your individual stock has moved down. It could happen due to company specific factors. In that case, you expect the returns to go back to its average, where the stock, when it starts moving and runs for 3 weeks, you can measure how many straight weeks it moves when the stock starts moving northwards, how many weeks it runs, how many green candle it forms, how many red candle it forms. When it goes down, how many weeks. You can read that. That is all statistics. That is all available. So beta adds to your mean reverting concept that ideally it should give you 20% more returns, but not always. So when you follow a mean reverting concept, whenever MSIL is in sync with Nifty, whenever it is in sync with Nifty, whenever the movement syncs, then it will. So if it has underperformed, ideally when it starts giving you return, so it also somehow, these two asset classes, it is a mean reverting concept, because otherwise, without mean reverting, if the stock continues to tank, for example, then your beta concept has no meaning. It all revolves around the mean reverting. Because पता चला कि आपका निफ्टी ऊपर ऊपर पे चला गया और ये स्टॉक जो है, जो भी स्टॉक है, नॉट MSIL obviously you don't expect it to become zero, but अगर नीचे 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 चलता गया, then what is the use of beta? So beta is a mean reverting concept. It is added to the slope. Slope मतलब sensitivity, है ना? But sometimes the sensitivity may fail. So there you will have to calculate probabilities, है ना? What is the probability of failure of the sensitivity? Because you can't blindfolded adopt beta. Then your concept is wrong. है ना? That is the risk. That is the risk. Then the question is, so okay, we understand from a sensitivity perspective. So we have one topic where we are in sync is from the sensitivity perspective. वहाँ तो कोई doubt नहीं. Second is, and sensitivity is equal to slope. वो आपने देख लिया, slope है, slope of the line है, ठीक है? हाँ, which is what you see. This is the slope of the line. हाँ, बोलिए. नहीं, बट आप यहाँ पर दूसरा टॉपिक कवर करो ना. दैट यू कैन डू. दैट्स व्हाट आई एम सेइंग, दैट यू कैन चूज योर कम, बट व्हेन यू आर कवरिंग दिस टॉपिक, हाँ, बिकॉज यू आर कवरिंग दिस टॉपिक, systemic risk, you're covering this topic. If you're doing as, you can do sectoral also, but then you are addressing different problem. Then you are addressing the problem of the mean reversion, the cash inflow into the system, which sectors are doing good. So that's a different problem that we'll address. So we'll come to that. But here, when you are looking at systematic risk, we will address that. So abhi you are covering systemic risk purely from a textbook perspective. When I am investing in America, how much do I expect from Dow Jones, and how much I would expect from, say, Nasdaq? From Nvidia or some Facebook. So it's a systemic problem I'm addressing. I'm not addressing sectoral inflows and outflows. The FPI sectoral inflow, वो दूसरा है. Second is, so sensitivity is equal to slope. This is valid only when your stocks are mean reverting. If there is, और इसके लिए statistical test होता है that you will be exposed to. ठीक है, इसके लिए वो KPSS स्टेशनरी टेस्ट है ना, उसी के लिए. If it is non mean reverting, then the whole concept of beta is gone, correct? Because the stock will keep on falling and you will keep on picking a stock and remember, and you realize that it has not led because this order is the Nifty chalega तो ये क्यों नहीं चल रहा है, but it could have some problem. So are there instances where this stock has failed? वो भी आपको टेस्ट करना पड़ेगा, and whether it is actually mean reverting or not. If it is not mean reverting, then this would not be. ठीक? Especially in conditions because buyers and retail buyers buy it for making money, not for losing money. So जब positive diversion है, this is running, it is expected to give me 20% more returns than Nifty, then it is okay. It is giving 40%, I'm very happy. But when reverse is the case, when I'm losing money, then I will have to go and apply a stationary test कि ऐसा तो नहीं कि भाई ये mean reverting है नहीं, I am buying it in a window when this stock is not going to reverse. So you'll have to run it through some statistical test to analyze whether beta makes a sense or not. So beta also in that sense measures your risk appetite. How? Agar, if it is all positively related, now let me repeat that. That is not written in the book. So listen to it carefully what I'm trying to explain. First of all, it says if Nifty moves 1%, and any stock, let's say, let's not name it, it will move 1.2%. You all agree to that? Correct? If Nifty moves 10%, then this stock would move 12%, and 100% is 120%. ये तो सबको अच्छा लगता है. This number everyone wants to see, and that is what influencers are talking about. But ऐसा तो होने नहीं वाला है, because stocks are mean reverting. Mean reverting का image याद रखिए. That means if it can give you positive returns, it can also give you negative returns. Okay? Correct? And this is your average return. So when this phenomena applies, then we come to the concept of beta being defined as a risk factor. समझे आप? अब यहाँ पे शुरुआत होती है रिस्क. जब कोरिलेशन इतना अच्छा है तो मुझे सब पढ़ने की क्या जरूरत है. निफ्टी चला ऊपर, निफ्टी गिरा हुआ अभी जैसे सिचुएशन में, मैंने अब निफ्टी एक्सपेक्टेड है सबको कि ऊपर जाए, कभी ना कभी तो ऊपर जाएगा. तो आई डू कॉस्ट डॉलर एवरेजिंग, आज खरीदा, अगले महीने खरीदूंगा, फिर अगले महीने खरीदूंगा, फिर ऊपर चला गया, बहुत अच्छी बात है. लेकिन ऐसा नहीं हुआ तो then the concept of beta changes, that it is talking about risk. अब निफ्टी का रिलेशन भूल जाइए. अब आपको सोचना है कि if it is 1.2 है ना, if beta is 1.2, इसका मतलब है it can give you 20% more returns or it could underperform by negative 20%. अब यहाँ पर जो है concept of volatility comes, and volatility has no sign, has no color. It could be plus 20% or minus 20%. It is more volatile than the concept of volatility. Then the concept of correlation आगे हटा दीजिए, क्योंकि आप you are thinking only unidirectional. Correlation in a statistical concept is only unidirectional. Correct? Do you agree? Yes or no? Link हो रहे हैं आपके टेक्स्ट बुक से. But when you bring the concept of volatility, it becomes bi-directional. मतलब it can go up also, it can go down also. This is what you have studied in your Black-Scholes binomial tree just before Black-Scholes. The probability of this going up, है ना, the probability of up and the probability of going down. इसको binomial tree बोलते हैं, that you studied. Now here the concept of beta from a statistical class switches to a risk management class, an FRM class, or it switches to portfolio management class. समझे आप? Because now you are applying the real concept of volatility. So volatility with regards to what? Volatility with regards to your larger index. पहले तो इंडेक्स का मेजर कीजिए बिफोर यू मेजर सेक्टरल. पहले निफ्टी को क्या रिस्क है वो आप देख लो. निफ्टी इज में प्रेशर कहाँ से आता है? व्हाट आर द फैक्टर्स? तो पहला फैक्टर क्या है? क्रूड ऑयल. दूसरा फैक्टर क्या है? USD INR, हाँ कमा उसमें ही आ गया, कमोडिटी हो गया,